At least one hedge fund is near bankruptcy, billions of dollars have been bailed out, and some speculate there could be even prison time for some big suits related to the manipulation of the free market over the stock GameStop. If you're curious if I'm talking about the same company that'll give you a nickel for your game, turn around and sell it for $30 for a 600x markup, yes, that's who I'm talking about, GameStop. But the real story is not about GameStop. The real story is about their stock and what's going on with their stock price. I never planned to talk about the news on my YouTube channel, but this is likely a one-time historical event, and it's all insane, must be covered. Please understand that I'm some dude on the internet. This is not financial advice, and all of this news is moving very quickly, so please fact check everything I say for accuracy. It all starts with GME, GameStop stock, and an all-out war that's occurring between retail investors, aka people investing from home like me or you, and hedge funds. You see, stocks can be bought and sold, and people can make money when the stock price goes up, and people can lose money when the stock price goes down. But you can also bet that at some point in the future, a stock price will go down, and that's called shorting a stock. And when you're shorting a stock and the price goes up rather than going down, or it does the opposite of your bet, you have to buy the stock at the current market value and cover the difference. This will cause you to lose money. And as you can imagine, the sky is the limit if the price of the stock keeps going up. And a popular strategy for hedge funds out there is to short on leverage, meaning their $1 can actually be used at a 15 times leverage. So if they are betting $1 billion to short a position, they're actually getting $15 billion worth of shorting power. So big hedge funds have been shorting stocks like GameStop and other stocks, betting with leverage, shorting these positions and driving the stock price down. GameStop has been getting squeezed, and they have kept this up for months, making billions of dollars and nearly bankrupting GameStop. You can observe the price of GameStop, which has gone from $30 to $20 to $15 to $10 to $5, and even causing GameStop to close nearly 800 of their physical locations. Hedge funds have repeated this activity with many different stocks, making billions of dollars. And this is where Wallstreet Bets comes in. A subreddit, a group of individual investors like you and me who figured out that hedge funds actually shorted 140% of all stocks in GameStop, meaning that they can't actually cover all their position. There actually is not enough stock to cover all the position for their short. They shorted on so much leverage, there's not enough stock. So given this level of greed, retail investors or investors like you and me decided to buy up all the remaining GME stocks. So when the hedge fund short position eventually expires, they're required to buy the stock at market price or whatever price the retail investor decides to sell at, which is essentially trapping them in this trade. And this is called a short squeeze, when the short position has to buy the stock at a higher price, thereby driving the price even higher. And the biggest casualty so far of the hedge funds was Melvin Capital Management, who lost nearly 30% of their balance sheet, requiring a cash infusion from Griffin and his partners at the hedge fund at Citadel of about $2 billion, and then an additional $750 million from Mets owner Melvin, who already has the $1 billion in the fund. Fast forward a few days, and every effort these hedge funds have made to crash the price of GameStop have failed. The price keeps surging higher, and these hedge funds keep adding to their short position. And now they're crying out on mainstream media saying that Wallstreet Bets should be investigated and banned for market manipulation. And the question of freedom of speech comes up. So what's the difference between a group of investors on Reddit discussing investment strategies and stocks that they like versus a group of finance people on mainstream media discussing stocks? What's the difference? And for many, the answer is there's really no difference. But since these hedge funds are caught in a bad trade, there are cries for bailout and also cries that there's market manipulation. And if you recall, in 2008, that's exactly what happened, was a multi-billion-dollar bailout that occurred for the big banks and also some large investment firms. And if you remember, when there's large bailouts from the government, that's the taxpayer who pays for that, me and you. And this has caught the attention of big names like Elon Musk, who's been the target of short sellers for his companies, and also for billionaire investor Chamath, who is running for governor of California. And with their support, they have rallied the group of Wallstreet Bets and have brought a lot of attention to this cause. And with their help, they have garnered more support for the retail investor or individuals on Wallstreet Bets to fight against smart money or hedge funds exploiting leveraged short positions manipulating the market. And as of Thursday, January 28th, billionaire investors and hedge funds are getting smoked. So companies like Robinhood, E-Trade, M1 Finance, and other platforms have eliminated buying of GameStop and have only allowed selling of this market, effectively crashing the price of the stock. Some speculate this is for their billionaire investor friends in these hedge funds to be able to get out of their positions. And this smells really fishy to many retail investors who believe that there are phone calls behind the scenes and possible manipulation occurring that are untraceable at this moment. Robinhood and other platforms who have restricted trading claim that it's the Apex clearinghouse who was not able to meet their regulatory requirement of capital, and that's why they had to shut down trading. You see, a clearinghouse is an intermediary between a buyer and seller, and it takes 2 days to clear a trade. It happens instantly for me and you, but behind the scenes, it takes 2 days to settle a trade. And Apex Clearinghouse in this situation needs to come up with the collateral on behalf of the broker to settle the trade. But when there's too much volume and there's a collateral requirement, there can be a limitation on what the Apex Clearinghouse can do. At least this is a claim from Apex Clearinghouse. So some retail investors wonder, is Apex Clearinghouse also a target of some of these large hedge fund manipulation? And on Friday, January 29th, trading has opened but in limited capacity, and in some instances only allowing retail investors to buy one share at a time. And the prices continue to climb. So here we are in a completely unprecedented time with many underwater short hedge fund positions, a question about the free market trading system with private platforms like Robinhood, and a question to the SEC whether or not a hedge fund should be able to short more stock than is actually available in a company. It is a pivotal time for the retail investor, and in my opinion, it's a true win for shining a light on some potential problems with large leverage short positions from some of these hedge funds and some of these corrupt practices that happen behind the scenes. Let me know what your thoughts are down in the comments below. Thank you for tuning in. Please smash the like button and subscribe to my channel. Thank you so much.